Hello, and welcome to Benzinga's very special virtual event titled Pharma Companies versus a Tough Macro Backdrop. I'm Matt Steinmetz. I'm Vice President of Virtual Events here at Benzinga, and I'm so pleased to be kicking off today's event. As we look forward to 2024, delivering for patients and investors will happen against a backdrop of the election, burgeoning AI, talent shortages, rising capital costs, challenging foreign exchange impacts, pressures on consumer spending, sticky inflation, and ongoing regulatory scrutiny of transactions. These headwinds and many others come on top of blockbuster patent expiries, rising competition across most therapeutic areas, and the impact of the Inflation Reduction Act of 2022. Over the next 90 minutes or so, we're going to hear from several industry experts on these topics and more, and we are so glad to have you here for it. Now, before we get started, I want to briefly acknowledge today's sponsors. A big Benzinga thank you goes out to GRI Bio, CNS Pharmaceuticals, and Zynex for their incredible support of this webinar. A quick thank you as well to our technology partners at Daily Hunt. And finally, if you enjoyed today's programming, I would urge you to learn more about Benzinga's upcoming live and webinar events at benzinga.com/events. We here at Benzinga are committed to ramping up all of our events in person, virtually, webinars in the coming weeks, and are planning to provide you some really, really timely and compelling and exciting programming led by our award-winning editorial team. For example, we'll host a live webinar every Thursday at 11 a.m. Eastern Time. All right, so let's get today underway. Joining us next as today's host is my colleague and an editor at Benzinga, Tony Noto. Tony does a phenomenal job covering this beat and many others. And we have him here. Tony, welcome.
Thank you, Matt. It's a pleasure to be here. I've been looking forward to this all week. Biotech is a sector that I very much enjoy covering. I am not an expert, is what I'm trying to say. But we have plenty of experts and people in the industry, movers and shakers, that are lined up to talk to you today. It's typically a risky bet for retail investors. Companies with candidate drugs that are already in clinical trials are usually the ones that attract the most money. But even those types of companies are having a hard time these days. So we're going to speak to folks about how investors are even more risk averse these days. The difficulties in attracting funding and how that diminishes in this era of high interest rates, and the four big challenges that I think are facing the biotech industry: loss of patents, competition, high R&D costs, low R&D productivity, and we're going to talk about all of that and more. And so, with no further ado, I'm going to bring out our first guest. He's a Columbia alum, specializing in neuro-oncology and gene therapy. He's also a Grammy Award-winning musician. How often do you get that combo? Please welcome the CEO of Rocket Pharma, ticker RCKT, on the NASDAQ, Dr. Gaurav Shah. How are you doing, Dr. Shah?
Hi, Tony. Good to see you again. Doing great.
Already putting us all to shame with that amazing backdrop with a grand piano and a fireplace.
This is just virtual background that you provided, so you get credit.
Well, it is a fireside chat, so It's very fitting. Well, I'm really happy that you're taking the time to speak with us today. We've touched base a couple of times over the past year and a half, and you're always full of insight. One of the things we talked about in the days leading up to this webinar was how the pendulum has swung back to favor gene therapy. And I wanted to just kick off and hear your thoughts about that.
Yeah, absolutely. So I think, yes, that's well said. The pendulum has swung back in favor of gene therapy. And a few years ago, gene therapy was the hot ticket in town. It was sort of a honeymoon period. There were a lot of gene therapy names, private and public, that were coming out and on investors' radars. In the early days, we had Avexis, we had Bluebird, and these were companies and academic partners that showed really compelling data. When gene therapy works, it really works. It can be transformative for patients, and it can be curative, right? In the history of medicine, we've always talked about medicine as a therapy, but not as a cure. With gene therapy, what we're doing is replacing a faulty DNA with correct rectified DNA. And that's the most fundamental level of who we are. It's our core of who we are as physical beings, right? DNA. So replacing DNA with the right DNA can be transformative. So there was a lot of excitement around early, I would say in the early 2010s, mid 2010s. And then as the industry evolved, we went through regulatory scrutiny, some commercial scrutiny. And the reason I say it's swung back, the pendulum has swung back in favor of gene therapy, is that the companies that have real assets with real value delivered to patients are going to be the companies that also deliver value to shareholders, right? It's not all gene therapy is going to work, but when it works, it really works well. And I'm very proud and honored to be part of a one such company, which is Rocket Pharma.
Yeah, and Rocket has accomplished a lot in gene therapy. Last time I saw you in person, we were in Manhattan, and you told a really amazing story about how Rocket is treating Danon disease. And I'll let you explain what Danon disease is first, and then perhaps go into an anecdote of that little boy that you saw that one Halloween who was suffering from Danon's, but then things turned out pretty well for him. Yeah,
so Danon disease is a disease of the heart. It's cardiomyopathy, means it leads to heart failure. This is an X-linked disease, which means it's on the X chromosome. And people who have mutations in a gene called LAMP2 go on, especially boys, to have heart failure early in life. In fact, boys on average only live until about the age of 20. And then they either pass away by then, or in rare cases, they can get a heart transplant. So LAMP2 is like the vacuum cleaner of a cell, right? It's the on switch of the vacuum cleaner. So there's a process called autophagy, which cleans up and recycles debris inside our heart cells and other organs as well. And when the switch is off, you get this garbage and recycled needs that build up in the heart, and the heart becomes very large. So Danon disease is a disease of very large hearts because the cells can't clean out their own debris. And unfortunately, these hearts become so large that they can no longer pump effectively. We've developed a gene therapy for Danon disease over the last few years. We've completed a phase 1 trial. And again, when it works, it really, really works. If you select the right programs, the right diseases, and have the right gene therapy approach. There was one, I think you're referring to this one boy who was 11 years old. And before he got gene therapy, when he went trick-or-treating on Halloween, he had to be pulled around in a wagon. And we know this through, of course, the physician who treats them, but also through just the records that we keep about each patient. It's very important to follow patients' quality of life, right? This patient had to be hauled around in a wagon in a wheel, I guess, what do you call those? Just those little wagons.
A wagon wheelie, yeah, I know.
Wagon wheelie, you know what I'm talking about from childhood. This year, about a year after he got the gene therapy for Danon disease that we provided, he was able to run around during Halloween from house to house for 2 hours. And even after the neighborhood closed, he still wanted to do more. That's an example. Again, this is a boy who otherwise, without any intervention, is probably would have been headed toward worsening of heart disease over time, like I said. So really remarkable. I mean, we have the chance here to convert someone who might pass away in their early age to someone who could potentially live into their 70s, 80s, 90s.
So what is the goal here? Is to bring this to regulators and get the FDA to approve treatments for Danon's? I had read that there is no FDA approved treatment for Danon's at this point in time.
That's correct. It's a disease that can only be addressed through either a heart transplant or a gene therapy, just the way the protein is structured and where it is. So yes, gene therapy would be the first medical therapeutic, and we will be approaching FDA once all the trials are done, the pivotal trial is done, to garner an approval. We're already in that phase for other programs that are hematologic bone marrow programs. like Fanconi anemia and LAD1 were already approaching the FDA for approvals. But Danon would be the first cardiac gene therapy ever to be developed. So I think it's a very exciting time, not just for Rocket and gene therapy, but for the field of cardiology, because I think it's going to unlock a lot of other gene therapy potentials, including several at Rocket in the future.
Yeah, I know that from my past coverage, I talked about the intersection of politics and biotech, and it hasn't been great in recent years, but in the past, but in recent years, there has been someone over the course of 3 presidencies who has given people reason to be optimistic about FDA approval. His name is Peter Marks. You had told me about him. He's a Columbia grad as well. I don't know if you cross paths with him. He's an FDA director, and he's very well versed in cell therapy.
Yeah, Peter Marks. Actually, when I was I did my residency at Harvard Med at the Brigham, and he was my attending. So I've had the honor of calling on him several times for hematologic consultations at night. He's brilliant, and I think he's going to be quite transformative for regulators and regulations in general. He's been a big proponent of helping advance and accelerate the approval paths for therapies that can be curative potentially, or certainly transformative for patients. And I do think gene therapy falls in that realm. So he's a big advocate, and we look forward to continuing to work with his group over the coming years.
Yeah, and I imagine having the inside man in that respect makes people, maybe investors and analysts more bullish about the space. I don't know, what do you think?
Yeah, it makes me more bullish about it for sure. I mean, in some ways, I'm an investor, right? I'm investing my time and energy into my career here at Rocket, and thinking of investors in that view, I think I think this is a good turn in tide for the FDA to be able to embrace more and more gene and cell therapies moving forward. Absolutely.
So we have about 3 more minutes left, and I want to touch upon RCKT, not to be confused with RKT, but yeah. Rocket Pharma. I believe on last check, the stock was up today. When I interviewed you back in April for World Health Day, the stock was around $16.91, and it's up today. And Morgan Stanley was especially bullish for you guys. They predicted 150% increase in price target. Talk about that a little bit. What can the traders and retail investors watching this program today learn about Rocket, and what could they expect from the company?
Yeah, so we're creating value. We're always interested in long-term value creation. Fortunately, in this industry, what is good for patients is also good for investors. The more patients we treat with therapies that are curative and really work, the better for investors. We have developed 4 therapies, and all 4 out of 4, 100%, have demonstrated clinical proof of concept that's worthy of taking to regulatory and commercialization. We're going to develop several more assets after these 4. At least a pipeline of 4 to 6 more is on the horizon. And each of these are going to deliver value to hundreds, in some cases, thousands of patients. Danon disease is a disease that affects 15 to 30,000 patients in the US and Europe. Yeah. So over time, you put this string of pearls together, and it's going to create some real value for shareholders. The other point I want to mention is that we have our own manufacturing, so we can pivot quickly and drive down the cost of goods very effectively as we advance these medicines.
And we talked a little bit about deepening the bench and the importance of talent. And back in April, you talked about hiring, but I think you've kind of gotten the team that you wanted together, but you're still on the hunt for a CFO.
Yeah, so we are. That's the one seat that is critical to fill with the right person, especially as we head toward commercialization as early as next year. We're very lucky to have hired other great talent recently. I think you're talking about recent hires. For example, Mayo Pujols was hired recently, who was previously the head of cell and gene therapies, technical operations at Novartis. Mm-hmm. So we were able to pull him in and join our cause here. And as you can imagine, that was a real win. And we expect to have ability to bring on continued talent development in the same way. So.
Before we go, I just want to get in just a little bit of info on your music career. You're clearly a busy guy, but you're also a Grammy Award winning artist. How does music inspire you and your line of work? And do you still have time to play music? I hope
That's a
you do.
great question. As you can see, it makes me smile. I grew up in Texas, both with a combination of Indian classical music like Ravi Shankar, but also I grew up with Guns N' Roses. So sort of a hybrid byproduct of our society here. Music has driven everything in my life. I think of things with a musical lens on, including drug development. There's creativity in music. There's creativity in drug development. And I would just end by saying that just like one can build a great band of musicians who are better than the leader and who you really want to listen to and admire. You want independent voices that are also unified into one. That's the same way to build a team. It's really not that different. And we think of ourselves sometimes on our team as, hey, you play bass, you play drums, you're the lead guitar. So it's been a lot of fun to mix these two worlds together, Tony.
Well, that's excellent. And I want to thank you for taking the time and chatting with us today. Before we go, what's your favorite Guns N' Roses song?
Okay. Sweet Child of Mine is the obvious one. I also like Paradise City, and Welcome to the Jungle is not bad either. I like November Rain, and the Bob Dylan cover, Knocking on Heaven's Door, is also one of my favorites.
Can't argue with that. Thank you so much, Gaurav, for showing up today. I'm certainly glad you did. This was a great way to kick off this event. Thank you so much.
Thank you, Tony.
All right. Well, those are a couple of songs that you can add to your playlist. But after this event, because we got so many other great guests that we have to get to, next up is the president and CEO of the NASDAQ listed GRI Bio. Since the company launched in 1998, this gentleman has had over 2 decades worth of expertise in immunotherapies. And please welcome Dr. Marc Hertz. Marc, how are you?
Good. How are you doing?
Good. Normally, I would be nervous to meet a doctor named Dr. Hertz. I'm sure you haven't. That's not the first time you've heard that, probably.
No, not at all.
All right. Well, thank you so much. I really enjoyed reading up on your past expertise, more than 2 decades worth. And I want to start off by getting your thoughts on the patent estate that you guys have been slowly building up over the years and why that's so important.
Yeah. So, I mean, as you know, I mean, the value in biotech is obviously tied to the patents and the protection that we have for our programs. It's such a long and expensive journey to take a drug from, a concept on the back of a napkin to approval. We're very fortunate in that we have a pretty deep patent estate for our lead compound. It's around medical use, but it's very broad in its claims. And then we have a library of about 500 compounds where we have comp of matter IP for all of those. So we have a good balance of both programs with medical use and programs with comp of matter.
Yeah, and it's a way to stay ahead of the competition too.
Absolutely. I mean, it's we pour our souls into these companies and bringing them forward, and you have to know that you've got the protection to kind of get your product to where it needs to go.
I want to talk a little bit about the crux of the GRI mission, which is targeting natural killer T cells, which a lot of people see as the acronym NKT. What are they, and why is it an effective approach in treating fibrotic disease?
Yeah, so NKT cells are innate-like adaptive T cells. So they're really early responders in immune responses. We're talking within hours. And they're preloaded with cytokine message, and they orchestrate a lot of what happens after their activation. So they're controlling the recruitment and activation of other important cells in the body. And so there's different approaches that people use in targeting these cells. Some are using them as CAR NKT cells to go after oncology and to tap into their very potent pro-inflammatory characteristics. We look more on the inflammation and fibrotic side of the issue. So it's the opposite side of the coin, if you will, from oncology.
I read that caffeine can be anti-fibrotic. Is that true, or is that just a myth?
I hope it's true, because then I'm in a safe place, because I consume a godly amount of caffeine during the day.
Yeah, I thought that'd be interesting to touch upon. Marc, you can talk further about the competitive landscape Why do you believe GRI can have an impact in your two lead indications?
Yeah, so as I mentioned, these NKT cells are very early responders in immune responses. And so we're leveraging the regulation of NKT cells to target earlier in the inflammatory cascade, to intervene in these chronic inflammatory and fibrotic conditions. And so, in particular, if you look in a disease like IPF, what happens is there's a normal healing process that the body has. That if there's prolonged injury or repeated injury, that healing process eventually turns into chronic inflammation and fibrosis. And once these dysfunctional immune responses are chronically activated, they're really hard to turn off. They kind of have a life of their own. You have to kind of go in and try to reset what's driving those responses. And so by targeting a cell like an NKT cell that sits kind of at the apex or the top of this inflammatory cascade, you have the ability to really, intervene early in that inflammatory cascade and reset kind of the body to homeostasis, if you will. So
yeah,
what I was going to say in IPF particular, what you see is that there's multiple pathways that lead to fibrosis. If you're a little bit technical, a lot of it is driven through a molecule called TGF-beta. But there are other molecules that are TGF-beta independent that are also driving fibrosis. And to kind of, NKT cells are in this position where they're kind of high up at the top of these pathways. And if you can regulate them, you importantly downregulate TGF-beta, but you also have impact on other pathways that are TGF-beta independent. So the hope is that by intervening earlier in that inflammatory cascade, you can have a more profound effect on disease outcome and progression.
Okay, so before we go, we have about 3 more minutes left. I would love to get your idea of what challenges are facing the industry. What worries you at night?
Well, just generally biotech. I think 2023 is off to a better year than last year, but it's been a rough go. And I think that the market is looking for companies that have, clear focus, near-term clinical outcomes, and milestones that can help drive, shareholder value. And so, we're fortunate in a position where we have 2 clinical stage programs, moving through to their top line data towards the end of next year. So we have those near-term milestones, but what keeps me up at night is just execution.
Yeah, and what about the recent news about the credit rating of the United States going down from AAA to AA plus by Fitch? A lot of people were making a big note about how tech companies should be worried. What about biotech?
Yeah, so biotech, as you know, we're so dependent on raising money every few years to fund the next stage of our development. But again, ultimately, it all comes back to clinical data. So there are going to be rough times. There are going to be, more optimistic times. But at the end of the day, it comes down to clinical data. And if you can get yourself to those points, I think you'll be okay. It's a storm we weather all the time in biotech. If it's not one thing, it's another.
So stormy weather. You went to University of Colorado. Are you a big skier?
Not as much now, but yeah, I certainly was when I lived there. I got more and more into kind of backcountry skiing and telemarking, and just love it.
Okay, great. Well, I really appreciate you taking the time. Is there anything else you'd like to say to our listeners who are looking for that next stock and perhaps want to add GRI to their portfolio?
Yeah, just what I mentioned. We're in a rare position where we have multiple important value-driving clinical endpoints coming up within the next 12 to 18 months. So we're excited to bring those programs forward and to kind of keep the market updated as we make progress.
Marc, thank you so much for joining us today. I'm definitely going to keep in touch on NKT cells, and please come by and talk to us again. I'm sure we'll have a follow-up at some point.
I'd love to. Thanks so much. Appreciate it.
Thanks a lot. All right, moving right along. My third guest is the CEO of Ocean Biomedical, ticker OCEA. He is also the first South Asian person to run for the U.S. Senate. He comes from a family of all medical doctors, and he is coming up next. Yes, do we have him queued up?
What is up, my man Tony? How you doing?
Oh no, it's Aaron Bry. How are you, man?
Good. We're gonna be back. We're waiting for one of our guests to join. Have some technical difficulties, so we'll just talk some shop real quick.
It happens. It happens. That's the name of the game. We're alive, right?
Yes, sir. So I'll just do a quick market overview. So what's going on right now on Wall Street. The S&P 500 down still. I'll get my Benzinga Pro pulled up here in a second. And then biotech specifically. Got to talk about that today. The XBI down about 0.2% right now. Not having a great month so far, down about 10% on the last 6 months, Tony. So biotech has not really been participating in this broad market rally that we've had throughout the last 6 months. What do you think, Tony, we need to see to before biotech starts to kind of start coming back in favor?
Well, I don't think the news from yesterday from Fitch Ratings helps. So it might take a little longer than expected. I'm glad Dr. Hertz talked about that a little bit. I was talking with someone, she's an IPO lawyer, and she told me that the market essentially gets very, very jittery with any sort of blip. But she had a really busy July. So she pretty much, they love certainty, investors, but doesn't require all to be calm, right? So if anything, it's going to take a while, but that shouldn't stop people from building their portfolio and looking at companies like Rocket and GRI and really doing their diligence on those.
Yeah, I'm catching up on the chat here. What up, Manny? How you doing? Always good to have you join us. And shout out to everyone in the chat that has joined us today. If you guys have any different stocks, especially in the biotech space, any biotech stocks you want us to check out or ones that you've been interested in, make sure to drop them in the chat. Again, we're going to have some more exciting companies come in with us for the rest of the day. But yeah, so you see XBI trading down slightly. The Qs trading up in the green barely after a really rough couple of days here for tech. Yeah. Anthony, I mean, tech has been so strong all year that I think a lot of people have been anticipating this sell-off, and then you had some kind of not so great earnings reports that have dragged us lower. So the Qs we're almost at 400, 388 a couple, July 20th looks like we topped out there. Now we're at 374. So tech has been showing some weakness throughout the past couple days, but slightly in the green today.
Yeah, and I can point to Rocket Pharma, whose stock has been in the green for a while. I mean, it's got a high of 24.53, and I want to reiterate from our conversation with Dr. Shah, Morgan Stanley is very bullish on this stock. They're predicting 150% uptick, and so it's something to keep an eye on. It's very nuanced. Not every biotech is the same. And you really have to do your due diligence, see what clinical trials they're involved with, what products they have coming out, who the talent is. They require a little bit of an extra look as opposed to other sectors. So I want our listeners to keep that in mind.
Looking at Rocket on here on Benzinga Pro, which if you haven't checked it out already, you should. Yes. Yeah, I mean, it's got these analyst ratings from a bunch of big, whether you're talking Raymond James, Oppenheimer, Morgan Stanley, like you said. So to see, because a lot of times in biotech, you're talking about these like pre-revenue companies that haven't put anything to the market yet. But Rocket is like, this is a $1.5 billion company. This ain't no small thing, and it's getting these ratings from all these big banks. So it's a little bit more, seems further along. So I like that when I'm looking at different biotech companies.
Well, that's why I brought him on, and that's why I'm going to bring on our next guest, who I'm certainly glad was able to join us. He is queued up. He is like I said earlier, he's the CEO of Ocean Biomedical, ticker OCEA. He's the first South Asian person to run for the U.S. Senate. So that's pretty cool. He comes from a family of all medical doctors, so I'm sure his parents are very proud, unlike mine. Ladies and gentlemen, please welcome our guest, Chiranjeev Kathuria.
Hi, Tony. How are you?
How are you?
Good, good. Thanks for having me on.
No, thank you for joining us. I hope you're having a lovely morning. Where are you calling in from?
Chicago.
All right, great. Chi-town, I love it. So I want to just roll right along and jump right into it. Malaria is a big global story right now. Talk to us about Ocean Biomedical's approach to addressing it.
No, absolutely. I think, globally, if you look at malaria, it's the leading single agent killer of children, bar none. 500,000 children die from malaria every year. Just today, over 1,300 kids will die from malaria. And as you've seen some cases now in the US. And a lot of the prophylactic vaccines haven't been as effective, and a lot of the drugs are developing resistance. So what Ocean Biopharma has done, based on discoveries at Brown University and Dr. Jonathan Curtis, who's the head of the MD PhD program at Brown, we've developed an mRNA vaccine candidate that's shown to be over 90% effective in non-human primates.
And your team has also identified a novel target and pathway that could be applied to pulmonary fibrosis. Why don't you tell us a little bit more about that?
Yeah, so absolutely. So one of and this came out of discoveries at Brown University and Yale. One of our scientific co-founders, Dr. Jack Elias, was the former dean of medicine at Brown, the former chairman of the Department of Medicine at Yale, and served as president of the American Association of Physicians. So this was developed over the past 30 years with almost $125 million of grants. So basically, people may not know this, but 50% of all the deaths in the developed world are due to pulmonary fibrosis. So our small molecule candidate has been shown to be disease modifying in fibrosis, and all the four gold standard models of IPF or pulmonary fibrosis, we've shown to have an 85 to 95% reduction in collagen accumulation. And we believe it's safe because it's already been in humans as an antibiotic.
So talk to us a little bit about what the bench to bedside gap is and why are you focusing on that?
It's interesting. Almost $75 billion go into universities to develop these great biopharma assets, but they get stuck in this valley of death, or what we call, just purgatory, because they have their early discoveries that haven't been proven to be promising commercially. And, either venture capitalists or private equity or pharmaceutical companies don't look at them. So we take these promising discoveries, take them through clinical trials, fund them, and engage with regulatory approvals. And I can give you, one example of what we've been doing in one of our companies. So in oncology, I think, unfortunately, everyone knows someone who suffered from cancer. And if you take glioblastoma, 28,000 people die from glioblastoma, or 28,000 people are affected. 10-year survival, 5-year survival actually is less than 5%. And the leading cause of cancer deaths in the US is non-small cell lung cancer. So out of discoveries at Brown University, they've discovered the master checkpoint immune, candidate, which we have shown that are bispecific antibodies in human glioblastoma cells can result in almost 60% reduction in tumor burden, and it can prevent almost 90%, metastasis in melanoma of lung cancer. So it's a very significant discovery, which we hope to bring to patients. And that would have never happened if we weren't, and there's probably a lot of discoveries like that in universities.
Well, and that speaks to Ocean Biomedical's mission. I know you guys were founded on the opportunity to give back. So there's a lot more to be had and a lot more discussion to be had on this topic. Thank you so much for joining us today, Dr. Kathuria. It's been a pleasure, and we'll be hearing more from you, I'm sure, in the not too distant future.
Thanks, Tony, for having me. Appreciate it.
And with that, I'm going to kick it back to my co-producer, Aaron Bree. Aaron, are you queued up? I believe you have a guest coming up. Perhaps there's more technical difficulties, apparently. Dr. Kathuria, this is the joy of live programming.
So happy to continue on and tell you more about it, or we can talk more.
I have a million questions. I'm a factory of questions, which I'm sure I can ask. But we do have another guest lined up, so I want to make sure that they have their time.
No, absolutely.
Okay. All right. While we wait for Aaron, Dr. Kathuria, why don't you tell us a little bit about your reaction to the Fitch Ratings downgrade of the U.S.?
It's if you take a look at it, I think it's happened 10 years before, and sometimes markets tend to shrug it off. But if you look in the context, I think it's good for both parties, to look at what this means and what it means for the U.S., because treasuries have always been the safe haven for global capital, and they'll continue to be. But I think it's also a good message for both Republicans and Democratic parties to work together, to look at our debt, to work together to improve the economy. Obviously, running for the U.S. Senate, I've always been interested in things like that. So, but it has happened before, and markets tend to shrug it off. But I think it is an important message for everyone to look together, for both parties to work together to find solutions, which I think they're doing.
Spoken like a good senatorial candidate. Thanks a lot, Dr. Kathuria. All right, let's kick it officially to Aaron. Hopefully he's queued up. There he is. How are you?
I'm good, Anthony. Thank you so much. Thank you, Tony, for carrying us through to this point. We've got some more companies coming up, some great companies. I'm going to be talking to CNS Pharmaceuticals. I've got John Klimico hanging out backstage. So I think without further ado, let's go ahead and bring on CEO John Klimico. John, how you doing today? Uh-oh. Looks like John might be having some tech. Can you hear me, John? All right, well, we'll take John off for a sec, get that figured out. While I'm doing that, let's pull up my Benzinga Pro. We'll take a look at ticker CNSP. We're going to be talking to CNS Pharmaceuticals, a clinical stage biotech company working on some interesting anti-cancer treatment. So, anytime you have companies that are working on anti-cancer drugs, if those drugs show some promise, can certainly take off in a hurry. The stock's trading higher today, up about 0.7%, as you can see here on the daily chart. Been trading higher since about mid-April, now at about $2.20. So found some consolidation here. Just looking at the chart, we'll go to the overview here and Benzinga Pro. Clinical stage pharmaceutical company focused on the development of anti-cancer drug candidates. Once I get notice that CEO John Klimico is ready to join us, we'll be speaking to him. Let's take another look at the overall market. S&P 500, as you can see here. We'll take a look at here on the 2-minute chart, see how we're doing intraday. Came up this morning after a big red day yesterday, of course, on that Fitch downgrade of the U.S. credit rating. So the overall market just took an absolute beating yesterday. All major indices closed in the red, including the Dow, which has been showing incredible strength over the past few weeks, especially. I think it's still closed higher, 12 out of the last 15 days, even though with some recent weakness. But Dow and value has certainly been what's been carrying the market, especially with tech maybe showing signs of topping out. We're going to know a lot more about the outlook on tech after Apple and Amazon's earnings tonight. XLE, you can see trading up about 1.5% today. So energy having a good day. Financials trading slightly lower. How are regional banks doing? KRE, let's take a look at the regional bank ETF. So this is, of course, got slaughtered back in February, March, when Silicon Valley Bank and some other regional banks essentially collapsed. But KRE, I mean, if you were buying down in May when everyone else was scared, thinking all the regional banks were going to collapse, you've made some money. I mean, some of these stocks, like local Comerica here in Detroit, look at Comerica. I mean, Comerica's chart looks almost identical to just the KRE chart. All right, I've got noticed that we're going to bring John back on. Oh, never mind. Not yet. All right, let's go back to the XBI. All right, now we are going to bring John back on. So without further ado, I'm going to bring on CEO John Klimico of CNS Pharmaceuticals. John, how you doing today? Looks like you might be able to hear me now, but now we can't hear you. So apologies to the audience out here for these technical difficulties. All right, in the settings, John, if you go to the settings and the audio settings, make sure your audio output is selected to your headphones or microphone, whatever your AirPods. There should be the little gear settings, and then to the audio. Sorry. Oh, here we go.
Can you hear me now?
Yes, sir. How you doing?
Excellent. Okay, I'm doing great. How are you doing?
I'm good. Thank you for sticking with us through that. I know it's frustrating, but all right, we're here now. Everything's working. So
yes, right.
John, why don't you give us a brief overview of CNSP?
Sure. So CNSP is a drug developer, and as you might infer from the name, we specialize in CNS oncology, and in particular right now in glioblastoma. So we've got a very exciting drug in a potentially pivotal phase 2 study in recurrent GBM. We've got about 180 patients on study, so a really nice, robust sample size. Expect to complete enrollment there later this year. Just had some exciting announcements today about how the trial's going and our enrollment's along on this project. Very, very excited. It's a really cool drug. It's the first anthracycline. So the first drug in its class to cross the blood-brain barrier and actually demonstrate treatment effect in GBM. So kind of an important milestone in the pharmacopoeia for this really devastating disease.
Well, there you have it. Yeah, it might not be the first thing that I think of a cancer treatment when you say cool drug, but it sounds like it is a cool drug. So, what are the current challenges in treating GBM? And John, if you don't mind me doing me a favor, can you explain what GBM is in kind of like layman terms?
Absolutely. So GBM is a shorthand for glioblastoma multiforme, which is the most devastating and widespread primary form of brain cancer. So it affects about 15,000 people a year in the U.S. Very sadly, it's almost uniformly fatal. It's just a devastating disease. Doesn't matter, I often say this disease doesn't discriminate. So it doesn't matter if you're Senator John McCain or Senator Ted Kennedy, or Beau Biden, the president's son, or actually the head of MD Anderson, where this drug was developed. If you get this disease, it's a near certainty you're going to die. And still, after 60 years of development in this space, there's really very few options for these patients. It's just a tragedy. And the main challenge that faces so many attempts to have treatment effect on this disease is the fact that the cancer is primarily growing inside the blood-brain barrier, which is this very specialized, network of cells that protects your brain. And most cancer drugs are substrates of the blood-brain barrier, so they get pumped back out, faster than we can pump them in. And that's really, if you don't remember anything else about what we do, remember that we have one of the few drugs that can have an impact on this disease that's been shown to cross the blood-brain barrier and get into the brain, and once there, was really designed to have selective uptake in the tumor tissue itself as opposed to the healthy brain tissue. So it's really a very, it's both old school chemotherapy, if you will. So it's not necessarily as sexy as some of the things that we read about in oncology all the time. But this is really the cornerstone of so much of oncology. The problem is with drugs like this that are used all over the body and have been used for 6 decades in great success in the clinic, is that most of them, almost all of them, don't get across the blood-brain barrier. But our anthracycline does, has really spectacular results in the phase 1 study. And so now we've stepped that up to a much larger sample size. Overall survival is the primary endpoint here. That's really what FDA is interested in GBM. They basically want to see our patients living longer taking this drug than they would be without. And so that's what we're trying to deliver for them.
Yeah, I mean, that sounds incredible. I mean, anytime it's such a kind of drastic problem that seems to have not had a lot of solutions presented forward, and now you guys do have this drug that is able to, like you said, kind of permeate that barrier. So John, how is enrollment going in this trial? When do you expect to complete enrollment?
Yeah, so we expect now, we just announced this morning, to complete enrollment by the end of this year. And importantly for investors, we also plan to announce interim results on the study as a whole by the end of this year. So we had been targeting Q3, and so this announcement represented a slight delay. However, the reason for the delay, frankly, is that patients have been living longer on this study than historical data on the comparator arm drug.
Sounds like a good delay to me.
Yeah, it's a great delay. I mean, as delays go, it really doesn't get any better. We deal with these very sick, tragically sick patients every single day, and we just can't be upset that there's a delay. In fact, we're quite happy for them, even though today I have to caution that we don't have the data in hand, so we really can't draw a conclusion as to the reason. But the fact that patients are living longer is certainly good news for the patients and their families.
Yeah, I mean, so you mentioned that you don't have the data yet, but I mean, like, do you have any what do you expect to see from this interim analysis? Is there anything you guys are looking for particularly?
Yeah, well, the interim analysis is really a snapshot look at overall survival for the first half of the expected enrollment. And so we've had that number of patients enrolled for some time. Enrollment has really been going beautifully. We've been enrolling for about 2 years, and interestingly, the first 75 patients took us about 18 months to do. The second 75 took us 6 months, so you can see a dramatic acceleration there. And now as I said earlier, we're up to about 180 patients. So we've already started the analysis on that first half set, and we will basically be looking, at a direct comparison, lomustine to berubicin, and announcing that data later this year. So we feel it'll be a really nice sample size, not the sort of more modest sample size that you usually see. The reason we decided to do this was simple. The results in the phase 1 were really terrific. And I basically said, look, we know this drug has treatment effect. We can see it. So let's try to head for the finish line instead of just an interim step.
Yeah, I mean, that's awesome, John. So what about, I mean, while waiting for the interim analysis and the snapshot there, is there anything else on the horizon that you think investors can be, looking forward to?
Yeah, I mean, I think those are really the big things. This is the type of drug I think that could be a game changer in this space. As one of our great investigators reminded us recently, you read about all sorts of really interesting targeted personalized therapeutics in oncology now, but the problem in neuro-oncology is we're still missing that cornerstone foundation, one-size-fits-all type of treatment that we're used to elsewhere in the body. And those foundational treatments are almost without exception chemotherapy drugs, and we just don't have that in this space. And that's why we chose to focus on a really powerful, interesting utility player in this space. It's an anthracycline, so these drugs are, this class of drugs is used first line in ovarian cancer, breast cancer, testicular cancer, probably about 20 cancers around the body, just not in the brain. So the chance to bring this very, very well-known, tried and true, well-tested, used in the clinic for 6 decades class of drugs to neuro-oncology, I think is what our shareholders are betting on here. And they're betting on a sample size and a very elegantly designed study to deliver to FDA exactly, what they want to see, which is overall survival data in a statistically meaningful way.
Well, there you have it. Well, John, good luck going forward with the rest of those, trials, and hoping, not just for your sake, but for anyone out there who has family members that might be impacted by GBM, that, that the drug is successful, because it sounds like this is something that is long overdue and needed.
It absolutely is. This has been a real, sort of hole, a black space in oncology in general. I often say there's 2 cancers you really don't want: pancreatic cancer and GBM. And that's just because the treatment options for those 2 are just so awful and so missing. And they both almost uniformly lead to to an early demise for the patients. And so we're quite excited about this. Obviously, the investigators in the study here and in Europe are excited. So it's been a great year for us so far, and we're really looking forward to delivering results in Q4.
Awesome. Well, John, thank you again for joining us on Benzinga's Biotech webinar. Hope you have a great rest of your Thursday, and hopefully we'll chat soon.
You bet. Thank you so much for having us. Take care.
No problem. All right, guys, that was John Climaco, CEO of CNS Pharmaceuticals, ticker CNSP. I see Maureen in the chat asking, do we do these biotech webinars regularly? Well, Maureen, this is something we are going to try and do more regularly. So if you like it, let us know. If you've got any feedback, of course, always welcome. Let me bring my man Tony back on. Tony, how you doing? Tony, do you know that you have the same name as the SoFi CEO, I think?
I never knew that, Aaron. Thank you for reminding me. I just only get his phone calls every now and then. I get invited to golf outings. I get investment advice and pitched on various startups because apparently he's a very rich man who sucks up all my SEO. So if he's watching right now, please.
Wait, is that why you go by Tony Noto instead of Anthony?
No, I was an Uncle Tony to wonderful niece and nephews over the years, and Anthony Noto is my byline. So if you see my name on benzinga.com, it's Anthony Noto. But yes, for the purposes of this event, I am Tony Noto.
Beautiful. All right, Tony. Well, I will leave it with you. I'll be back here in about 20 minutes or so. But man, take it away.
Thank you, Aaron. I'm very excited to bring on my next guest. He has covered it all: VC, investment banks, buy side, M&A. He's got plenty of deep industry and scientific insight to share. Please welcome Andreas Agrigides from Wedbush. Andreas, how are you?
Hey, Tony, how are you? Thanks for having me.
Thank you for showing up and joining us today.
Yep.
I just got to ask, you've covered it all, like I said, but you've been covering the emerging pharmaceutical sector since 2020. What a time to get involved in pharmaceuticals in 2020, when I guess the COVID-19 pandemic was just getting started. I mean, that had to have been really something.
Yeah, I mean, biotech, actually, that was a hot year for biotech. IPO bubble was, at its peak, or, at least towards 21. And since then, it's been a bit of a struggle for the biotech sector. They're working through the excesses of that IPO bubble, where a lot of early stage companies came onto the scene with little data to validate inflated valuations. And so, maybe jumping into it here a bit, but that kind of catharsis that we expect, or we are seeing now, is likely to lead to consolidation of some of these public companies over time, and basically filtering out the good from the bad, which is important, I think, to restoring the health of the sector.
Yeah, we talked a little bit about that before we hit record. You had mentioned that the biotech sector is lagging. Your exact words were, it's a dumpster fire. And I was wondering if you would like to expand on that.
In certain areas, maybe my words were a little bit loose there, but yeah, candidly speaking. But, look, it was returns in July were positive. It was up 1% versus 3% for the S&P. But yeah, look, year to date, biotech is down 1% versus the S&P, which is up 20%. So, there's a lot of catching up that it needs to do. We think there are a couple of factors that are contributing to this lagging. It could be a lack of generalist participation, who at the moment are probably captivated by returns in other sectors like tech. They're probably also turned away by the never-ending pricing debates. We have seen, just taking a look at my notes here, we actually have even seen first cycle approvals at lows. So in 2018, and this is an interesting fact, while we were kind of doing some digging on the sector, about 95% of companies, going for approval or getting approved first go around, and that's dropped to 76 in 2022. CRLs, which are complete response letters, again, sort of like a rejection that the application wasn't sufficient, they're up 28% year over year. So there are some things that are contributing to what many biotech investors are experiencing with the frustration. But maybe without me, I can continue, or you want to segue, but there are good opportunities here. I can get into those.
Well, and you also mentioned how biotech has sort of become mainstream. I know that you had mentioned that it was a part of the plot of a major movie with Dwayne "The Rock" Johnson. Hollywood is obviously can use it as a story narrative, but the narrative for retail investors is that they're very interested in the sector. And it's drawing a lot of generalists, as you said. Talk to us a little bit about that.
Well, we need more generalists. Usually the sector, what you end up seeing in kind of these cycles, is a big push from the generalist participation. And I think I made that comment around the Rock's movie. It was
the Rampage, wasn't it?
Yeah, it was like CRISPR technology. And so I think what contributed to a lot of the enthusiasm and generalist participation, 2018, 19, 20, in those years, was the fact that this is a novel technology. Gene therapy, gene editing was really promising, and it had a lot of, excitement around it. Right, this can be game changers. You can give products, you can give a drug one time and have a lifelong benefit. That the idea of that, and I think that has changed. There has been some clinical data that has tempered those expectations, and then, as I mentioned, those generalists are now focused on the lure of AI. Right, so. And you're seeing big moves in tech, and they kind of understand it a little bit better. Right? Biotech is technically a specialist place, so we do need, I think, more high-profile catalysts to get investors involved, and we've seen some attention being paid to drug development like Alzheimer's, but. That doesn't mean that you can't make a lot of money here if you can find the right stock. So stock picking has always been key in biotech, and it continues to be. To that point, we like in this environment, I think, what outperforms.
Yeah, what do you like? What are the attractive names here?
Well, look, as a setup before I get into those, is just later stage companies with de-risked assets with strong balance sheets that either have at least one commercial product on the market or one coming onto the market in the near term. So that said, our two top picks for the year, Ascendis is one of on our best ideas list. That fits that product profile. We have another one that I'll get into that kind of also has a differentiated. But of these later stage commercial, we like Ascendis. ASND is the ticker. We like United Therapeutics, ticker UTHR, and Verona Pharma, ticker VRNA. Those are our three top picks for the year.
So a lot to be said about late stage companies, but in order to get to a late stage company or become a late stage company, you have to be an early stage company.
Sure.
Talk to us a little bit about the challenges here. If you're a startup in the space, like how do you even attract venture capital, or where does the capital come from? And it's quite a hill to climb as a startup in the biotech space.
Well, there's supposed money on the sidelines, from what I'm told. So there's a lot of capital to be deployed. What from our conversations with investors and venture capital, they tend to like areas that are, attractive from either validated by pharma, meaning pharma has been looking at this area and seems to be an attractive space. So, I mean, I've talked about immunology. There's been a lot of acquisitions recently in the immunology space. Another thing, and so thinking about immunology and those acquisitions, I'll mention the company that we also like that's on our best ideas list. It's called Moonlake Immunotherapeutics. They also like rare disease companies, indications that, and I say rare disease, companies that have pricing power, that can go after a market that's relatively uncompetitive, where there are novel therapies that can come in, that can drive growth from volume and price. Usually that fits in the rare disease category. Back to my point about Ascendis, we think their opportunity in hypoparathyroidism is tremendous. There is nothing from a therapeutic standpoint out there now. Previous product from Takeda called Natpara is going to be discontinued. Current standard of care is supplementation with vitamin D and calcium. Every doc that we've spoken to is just can't wait for this product to become available. They had a small little ding, a CRL, again, back to this kind of what's creating a lot of uncertainty with the FDA earlier in the year. We think they're on track to get approval now. We should have some clarity on where that is in August. And then, potential upside approval before the end of the year, but conservatively at some point in the first half of next year.
Okay.
We're actually, and you could
So
tell from
you're optimistic.
Yeah, I mean, look, there are areas. I think that's what we do. We think we do well. I know I was carrying on a little bit, but that's kind of why we love the job, and what attracts us is finding these opportunities where you can really, part of the job is, everyone wants to make money. We get that, but it's nice also when you actually feel like you're a company that you're covering that's developing drug actually helps people.
Yeah.
And so that said, we think Ascendis has just this platform that is in endocrine that is really changing the game. They have a product that's a once weekly for pediatric GHD that's transforming the market. It's called Skytrofa. So a lot going on there. So we really like that and think there's tremendous upside in the next year.
I want to touch upon the IPO market. It's been a drought for the past 18 months. But I've spoken to a few sources who have said that they're feeling optimistic for the second half of the year, that it's beginning to thaw a little bit. What are your thoughts on IPOs versus M&A? And when you have these companies that have these innovative technologies that are worth looking at, I mean, look, L'Oreal did a biotech deal earlier this year, and you had said in a past conversation with me that there was a lot of M&A going on. So what are your thoughts on those two trends?
Yeah, I mean, usually it's M&A is a big catalyst driver. It actually gets generalist participation, it gets generalists to come back into the market. We just had this big announcement from Biogen acquiring Reata. There were some other notable, as I mentioned, acquisitions, Prometheus, Dice Therapeutics. So these companies, so there's no lack of attention being paid to these smaller companies, and I think that really should be something on top of mind for investors. And how we think about it, we think, for instance, based on where they stand in the immunology space and the quality of their data and their current phase of development, we think Moonlake is a takeout candidate, and it should be, and we raised our price target recently, and and we have confidence that the programs that they're developing are going to hit. So, M&A should be a big thing. IPOs are a bit more selective. They've been pretty successful in the few that have come out. It probably speaks to again, the quality of the names. Kind of a diverse pipeline with products in attractive areas are going to garner a lot of interest. And so those should continue to be, drivers going forward.
Andreas, you've given us so much to think over. Thank you so much for joining us today. Please keep in touch. Wedbush is always putting out wonderful reports and keeping us in the loop. And I'm sure we'll be chatting again soon.
Fantastic. All right. Thanks for having me.
All right. Well, you've heard it here, folks. There's so much to think about. M&A is on the up. IPO market can be coming back. A lot of emphasis is placed on how these clinical trials go and these exciting new companies that are either in the early stage or late stage. They have a lot going on. And we're going to keep it rolling. We've had senator candidates. We've had Grammy Award winning musicians. And we've had some, no kidding, a lot of brilliant minds today. And I want to bring on my next guest, who is an incredible person, quite an interesting entrepreneurial journey as well. His name is Danny Jung. He is from Prenetics Global, and he was in charge of a restaurant at age 25, then a hotel furniture business, and then an e-commerce company. And now he's the CEO of Prenetics. Is he queued up?
Hey, Tony.
Hey, Danny, how are you?
Good. Good morning.
Thanks for joining us.
Or good afternoon.
Yeah, good afternoon.
Thank you for having me.
6 minutes into the afternoon hour. Yeah, no, I'm certainly glad that you joined us today. Before we get started into the old technical speak, I would love to hear, what is more difficult, a hotel furniture business, restaurant business, or an e-commerce company?
Probably e-commerce company of the three. But now with Prenetics wise, this is the most difficult challenge, but I'm enjoying every minute of it.
So I want to, we talked a little bit about M&A with Andreas in the last conversation. You yourself have done a little bit of M&A in the past year when M&A volume is low, and you guys managed to do a deal. Why don't you talk to us a little bit about buying ACT Genomics?
Sure. So we went public last May on the NASDAQ wise, right? So I think with the public, with the IPO wise, we actually had a lot of good cash. So after the IPO, we have more than 200 million cash, zero debt. So we felt where's the areas that we want to play in. And we feel oncology is a significant opportunity for us. So last December, we made an acquisition of ACT Genomics, which is the market leader in Hong Kong and Southeast Asia for doing targeted therapy. So we do a comprehensive genetic profile on the individual, so identifying the targeted treatment for that individual. And so we have a very solid pipeline. We're going to be launching a liquid version of our tissue-based test later this year. In Q1 of 24, we'll be launching a MRD version of our test as well. So we're making significant inroads with ACT.
Give us an idea as to what the trends you're seeing are in Asia, the APAC region. It's quite different from here in the US.
Yeah, so I think there's a lot of misconception on Asia-wise. Because if you think about Asia-wise, I mean, talking about 1.4 billion people in mainland China, Southeast Asia, you also have another 600 million people. So you're talking about 2 billion people out of 8 billion people, right? So you're talking about more than a quarter of the world's population in Asia. So I think it's an really exciting market. I think the key interesting thing is that there's much less competition. So very few companies, for example, like Prenetics, have gotten to scale, have a strong cash balance, have a strong existing business. So I think that makes us very, primes us very well for the future.
How is it dealing with regulators there versus here? A lot was said earlier in this event about the intersection of the FDA approval and having regulators and the FDA here in the United States that can really see the potential in new technology from biotechs and getting these clinical trials forward and getting FDA approved treatments. What's it like in Asia, what you're seeing?
I mean, so what we're seeing is that every country has its own regulatory differences. So for example, in China, you have the NMPA, which is the equivalent of the FDA. Singapore is different. You have the HSA, Malaysia, Thailand, Vietnam, Indonesia. So every country has its own regulations. But so we just have to work through each regulator to get our products approved. So when we think about clinical trials, I think one thing you mentioned at first about NMA is last month we also made a very significant announcement in which basically we did a joint venture with Professor Dennis Low. So we actually, this is Hong Kong's largest ever private transaction at valued at US 200 mil, in which Prenetics, we put in 100 mil in this joint venture to take a 50% stake. So we're working with Professor Dennis Low and specifically on early cancer detection. And of course, Professor Dennis Low is one of the world's most influential scientists in liquid biopsy, the father of non-invasive prenatal testing. His last company was Serena, was acquired by Grail, and of course, Illumina acquired Grail. So the last 3-4 years, he's been working on the new technology called Pharma, and which is basically early detection for cancer. And we've gotten through already early clinical data on this. So we're embarking on another case control study to be completed by the end of the year. Early 2024, we will be embarked on a 5,000 person multi-country study on liver cancer and lung cancer immediately following that.
Let's talk a little bit about how these technologies fit together revenue-wise. What are the revenue contributions of each?
So right now, there's no revenues coming from Insight because we're still going through the clinical trials for that. But for ACT, as well as our other product, Circle DNA, which is a consumer genetic test, right now it represents roughly 50% of our business, Circle DNA and also ACT Genomics.
What are you most excited about in the product pipeline? And we talked about a lot, but what is it that if you had to put money in the bank, what would you do?
Well, we just did it, right? So we just put 100 mil USD into work, especially in this market environment. So extremely excited about the early detection space. Again, I think we're seeing a lot of companies in the US, Grail, Freenom, Exact, Guardant. But again, very few companies in this part of the world that is doing this. And again, working with Professor Dennis Low, again, his non-invasive prenatal test is now utilized by 15 million women every year. We believe the early cancer detection space by 2030, we can actually do 30 million tests annually. Yeah, because when you think about liver and lung cancer alone, you're talking about potentially just 400 million people at risk. So when you're talking about liver cancer, talking about HCC, there's 85 million hepatitis B patients in China, right? Lung cancer, same thing, right? And I think the key differentiation for our early cancer detection, we're utilizing a new technology called Pharma. And the advantages of this is that it's much lower cost, right? So we aim to get this out to the market by 2025 at a patient price of US $200, right? I'm sure Grail charges $950 for a test. We believe we can get very high accuracy but at a low cost. And by 2027, we aim to launch Presight 1, which is a MSET, a multi-cancer early detection test, capable of detecting more than 10 cancers with the same price of 200 US. So incredibly excited for this.
Yeah. And talk a little bit about Dennis Low. How did you guys meet?
Yeah, we actually met about 10 years ago. Yeah. So I've been wanting to work with him for the last 10 years. Yeah. So finally we got talking earlier this year. I was like, it makes a lot of sense because, again, he has the really great science and his backing, credibility. We had the capital and the management. So I'm also the CEO of the joint venture called Insighta, while retaining my role as the CEO for Prenetics Group.
So 10 years strong with Dennis. And we heard Dr. Shah talk about finding your band. He related putting together a good team for a company to forming a band because he's a musician. Talk to us about the importance of deepening the bench and finding the necessary talent to make these breakthroughs in personalized medicine.
Yeah, 100% agree with that, right? So it's very similar, and we have to have the best positions, or kind of like a football team, right? You have the best running back, quarterback, wide receivers. I do believe with this combination now, when we're working with some of the best scientists around the world, we're very proud that these scientists are actually based in Hong Kong. Yeah. And then we want to take this technology in this part of Asia. We believe Middle East is also an incredibly exciting opportunity. And we're already having dialogue in these markets, right? But again, going back, the team is very important. We're building up the teams right now. And we do believe we have a very international and very set of qualified people from a very diverse background, from scientists, investment banks, product and marketing as well.
Danny, this has been a great conversation. Thank you so much. I'm sure we'll hear more from you and Prenetics in the future. And thank you for coming on our program. We really appreciate it.
Great. Thank you, Tony.
Take care. All right, there you have it. And now we're going to move along to Prosomnus, which just came out with their earnings report today. You can head to benzinga.com and read the exclusive. The CEO, Len Liptak, is on deck. Len, how are you?
I'm doing well, thanks. Thanks for having us, Tony.
Well, first off, thank you for joining us. Obviously, the earnings is the big news. As a newsman, I would like to lead with that. What can you tell us? Were you pleased with the results? I imagine you were.
Yeah, very, very much so. I mean, posting record revenues and the growth rates that we posted in the quarter, certainly something that we're proud of. We're proud in terms of, how it represents the execution and performance of our teams around the world, but also proud of what it indicates in terms of acceptance of our therapy for the treatment of obstructive sleep apnea.
What are some of the macro issues that you were sort of worried about with this quarter? And talk to us a little bit about that, because a lot of companies, like we said earlier today, the slightest blip can make investors a little jittery.
Yeah, well, we like to have a diversified portfolio of growth initiatives, right? And I think you want some base hits, want some home runs, in your R&D pipeline or in your sales and marketing tactics. And so when the cost of capital goes up and the cost of business goes up, the economic value added threshold for some of those singles, or some of those projects may not be as attractive as they once were. And for us, it affects the financials of the business in terms of growing the business, of course. But at the other end, we're in healthcare, right? So it also may make it harder to commercialize and deliver care to patients, because as we maybe have to pull back on some of those initiatives, the real consequence there is limiting access to care for patients who need it.
We talked a little bit about, we wrote a little bit about the clinical adoption of the company's products and devices in the US and Europe. Talk to us a little bit about that. And are there any expansion plans in bringing those devices to other corners of the globe?
Yeah, absolutely. Great question. No, we're very pleased about the adoption of our products in North America and Europe. Our device is an intraoral medical device. It's a precision device. That means it's personalized to match the anatomy and treatment plan for each patient. So we're doing mass personalized, mass customized manufacturing at scale. And that's what allows us to generate excellent outcomes and also make it very easy and comfortable for patients to use. And as we educate physicians, we're finding that physicians are very open to looking at alternatives to CPAP, which is the incumbent therapy for the treatment of sleep apnea. A lot of patients either refuse that therapy or they fail the therapy. They fail to tolerate the therapy. And a growing number of physicians are looking at alternative frontline therapy. And with the clinical performance of our device combined with some of the scientific data that's been coming out, we find that there's a greater receptivity to prescribing our therapy. And we're very proud about that. In terms of outside of the US and Europe, Danny quoted some stats about China, which were extremely impressive, but point out that there's 176 million people in China who have untreated obstructive sleep apnea. So it's a massive opportunity for our product. There are 1 billion people worldwide with sleep apnea. Over 90% remain untreated. So we've put up impressive growth numbers. We're really excited about the momentum for our business, but we're really just getting started. This is a major public health epidemic, and we believe we provide a novel, scalable solution for it.
No, I know. And members of my family, friends of mine are all wrestling with this. But talk to us a little bit about, I guess, the market in general. There were some sleep apnea device recalls that made people very nervous in the past year. You as a CEO, does something like that make you nervous? Do you sort of assemble the PR team and figure how you can sort of capitalize on that?
Yeah, absolutely. I mean, it's absolutely. So our devices are one of the only devices in the field made from a medical grade class 6 U.S. Pharmacopoeia validated medical grade class 6 material. which is the safest level of biocompatibility according to U.S. Pharmacopoeia. And we did that on purpose because this is a lifelong therapy. Patients live with this therapy, and therefore it has to interact, in a biocompatible way. So we took deliberate actions from an R&D perspective to use healthier, safer materials. And we're pleased that we have an excellent health and safety record with the FDA in terms of side effects and adverse events, particularly in comparison to the other treatment options like CPAP or hypoglossal nerve stimulation.
Yeah. And how do you view the competition? I mean, is it something that weighs on you from the day to day, or do you just sort of look at the numbers and the 44% growth year over year that you guys reported today, or 43%, and just and keep it out of sight, out of mind?
Well, Tony, being an entrepreneur, I obsess over everything and every number. So I'm not relaxed about anything, so to speak. But look, the number one competition here is apathy. If people snore, they don't necessarily recognize that snoring is a sign and symptom of a much more insidious underlying disease of sleep apnea. So we want more people to get screened. We want more people to get into the treatment funnel. There are significant tailwinds in terms of home sleep testing that makes access to care easier. There's a lot more reimbursement and coverage programming around the world, which improves access to care. 200 million people in the United States are already eligible to receive our therapy if they develop sleep apnea. So that's the stuff that I worry about. But then also, yeah, sure, at the end of the day, the physician has to select the therapy that he or she believes is best for the patient in the chair. And that's where clinical medical affairs come into play. And we've had some excellent data demonstrating that our devices are highly efficacious, highly successful at treating OSA, and strongly preferred by patients because our therapy is comfortable, easy to use. People can have a normal bedtime routine, a normal lifestyle with our device, and it's more economical for payers and patients. So we really think that as we educate physicians more comprehensively and continue to grow our clinical data, that we're very well positioned to be the solution, to be the leading treatment option for this massive public health issue called sleep apnea.
Yeah. Well, let's talk a little bit about financing. Sure. The company, according to the report, a little over $6 million of cash on hand. Does that sort of worry a company like ProSomnus, or like what's the cash burn situation like?
Yeah, so we always worry about that stuff, as a function of course, operating the business, but then of course, investments in growth and being able to take advantage of the opportunity. But we feel that we're pretty well positioned with where we are today, with revenue growth as it is, with gross margins modestly expanding from where they are, combined with moderation and tapering of some of the operating expenses and getting leverage over some of those operating expenses. We feel like we're in a good position to be able to operate the business in a healthy way going forward. And then as we continue to develop our business, we can make decisions about taking on larger investments to accelerate growth of some of the programs that are in our pipeline, or even just our existing core products. So we're taking a very balanced approach to everything, as you can imagine. But also as you kind of start out, it's a challenging market, so we have to find the right balance of investment versus cost of capital, so that we continue to drive growth for our patients and providers.
What can we expect in Q4, and what can we expect in the first half of 2024?
Yeah, so in the second half of the year, in our field, there's seasonality. So we expect more growth, where there are two things happening. Obviously, we expect to leverage some of the investments we made in sales and marketing, and for those to enhance growth. But then also there is seasonality in our field where people manage their out-of-pocket deductibles. So we tend to see a little bit lighter revenue in Q1, a little bit heavier revenues in Q3, Q4. Due to that seasonality, and then you can expect to see, publication of data. We've got our FLOSAT study. The full data will be presented by the end of the year, beginning in August, and then also September and October at major conferences. That being turned into a manuscript. We also expect to have complete enrollment in our SOS study by the end of the year, and first data available in Q1 of next year. And then continued development of our RPMO2 device, which is our device with a physiologic sensor embedded that will enable for remote patient monitoring. So we've got a pretty busy roster here for the next 6 to 9 months, but we're really excited about it, and think it's going to continue to generate healthy, profitable growth for us.
Clearly. Last question, 30 seconds. Tell us, why did you do the cold plunge in Lake Erie in the dead of winter?
Yeah. Well, it started off as kind of a dare in business school, and actually in Lake Superior, which was colder. But every birthday, November 22nd, for 5 years in a row, I went to the different Great Lakes and jumped in the lakes, and it's just one of those things. I'm not a Grammy award-winning musician by any stretch of the imagination. My wife and kids could tell you that. But I do have some unique talents.
Hey, listen, that is impressive. I'll give you that. Thank you so much, Len, for coming on the program. It was a pleasure speaking with you, and we'll be sure to keep in touch.
Thanks, Tony. Much appreciated.
Take care. All right. Thank you all for joining us. We have another guest lined up, Thomas Sandgaard, who is joining us now. Thomas? I'm going to kick it off to Aaron first. He's going to bring on Thomas.
Hey, Tony. How you doing, man?
I'm doing well now that you're here.
We are going to be talking, we're going to be talking to Zynex here. Really excited about, so Zynex is engaged in the manufacturing and marketing of medical devices. So I think without further ado, let's go ahead and bring Thomas on the stream.
Hey,
Thomas, how you doing?
Yeah, thank you, Aaron, and I appreciate the introduction.
Of course. So am I saying the name of the company correctly? I want to make sure. Is it Zynex or is that right?
Yeah, Zynex. That's perfect. Yeah.
Perfect. All right. So tell me about NextWave and how someone can get a hold of NextWave.
Yeah, the NextWave is a home use electrotherapy product that obviously is very popular. You look at our growth, and it's our flagship. That's the device we get the most prescriptions on. And as I just said here, you need a prescription from your doctor. It's prescription strength electrotherapy, and obviously a very powerful tool or weapon against what we all know as the opioid crisis here in the United States. It's a device that provides pain relief, can increase blood circulation, etc., and certainly decrease the amount of opioids needed, for instance, after surgery, or can totally eliminate it. It's something that we hope we eventually can convince all surgeons and pain doctors to use as first line of defense in treating pain versus something that's applied later on. It's a great product. Obviously, consider it the best in the industry, and we have a great market share and are currently growing approximately 50% year over year. And again, the NextWave device is our flagship in the pain management division. We do have another division where we're developing products for hospital monitoring, not generating revenue yet, but what we're doing in the pain management division with approximately up towards 200 million in revenue this year and great profit is really driving the company's growth and driving us forward.
Yeah, so, and Thomas, I understand that Zynex has plans to expand into inpatient hospital monitoring. What makes Zynex inpatient monitoring technology different?
Well, we have four products or four product categories underway in that division. We started developing non-invasive monitoring of blood loss, for instance, during surgery or internal bleedings in the recovery room. We started developing that more than 10 years ago and have gotten the first 2 FDA clearances on products there that we're still collecting a lot of clinical data on. And we also have a device that can provide early detection of sepsis non-invasively as well in the pipeline. Recently, we acquired a company by the name of Kestrel Labs that has developed a couple of products laser-based pulse oximetry, which is much more accurate than anything else on the market today, and also another non-invasive device that can monitor total hemoglobin levels. So you don't have to take blood samples to get that reading. 4 very unique products, the 3 of them, blood volume or blood loss monitoring and early detection of sepsis, as well as the total hemoglobin monitoring. Those are all very unique products that doesn't have any competition today, anything like it on the market. So that'll be we expect that to be a long road of educating the clinical professionals to eventually adopt that. While on the pulse oximetry, we'll come out with the best mousetrap, literally a game changer in the biggest medical device market today, which is pulse oximetry. We'll have a product that is way superior to any competition, and we expect we should pretty quickly be able to earn a meaningful market share in a market that's well over $1 billion worldwide.
Yeah, and so Thomas, when do you expect that these monitors will be in hospitals?
We expect that 2 of them will probably sometime during 2024 be in hospitals. We'll be placing the blood volume monitor, the CM1600, and maybe another version of the CM1600 in hospitals here in the next many months. And not only will we be collecting data, we'll also place them to eventually convince hospitals that this is something that they need, so they can do better fluid management in hospitals. So that'll be hopefully sometime next year we'll start seeing some revenue and actual revenue on that. On the pulse oximeter, we expect that we sometime in Q4 will have all the data needed for our FDA submission. So we'll be sending an application, and it'll be a 510(k) that will be in with the FDA in Q4 of this year. It's going to be a pretty straightforward thing, I expect. So by the middle of next year, we should be selling the pulse oximeter. So in the middle of next year, we should start seeing revenue on 2 of the 4 product lines that are coming out.
Got it. And so speaking of, revenue and whatnot, will you need to raise capital to bring your monitoring vertical online?
Well, because of how well we are doing in the pain monitoring division, we expect to see an EBITDA of approximately 37 million from the pain management division this year. We're burning approximately 12 million this year in the monitoring division. So we are able to fund, as you can imagine, that internally. I expect there'll be significant costs associated with the launch of these 2 products and the subsequent launch of other products in the monitoring division. So we recently raised 60 million in a convertible debt note, and have approximately that much on the balance sheet right now. So we're well capitalized for that. So much that we consider today's stock price fairly low. So we initiated yet another stock buyback program just a few weeks ago, and are buying back $10 million worth of stock, and might continue to do so if the price justifies it. So we don't foresee raising any capital for our business in the near future. And we also expect we have a very long runway in the pain management division. We're looking at up towards 200 million in revenue this year. And as we get all territories populated and get all of our sales reps, we're more than 500 sales, or approximately 500 sales rep, I should say, in the field right now. As they all become productive, we expect to see and plateau at around 800 million a year with the kind of profit margins you just mentioned a little earlier. So you could say we're self-funded, but we have a strong balance sheet.
100%. So, Thomas, what are some key milestones that investors should watch for over the next, 1 to 3 years?
Yeah, in the short term, obviously that we continue to growth. We're coming out of a period with high percentage growth rates right now, because in the later part of third quarter last year and fourth quarter last year, the growth really started picking up. So our relative growth will be slowing down in terms of percentages, but we expect over the next many years to still be growing between 20 and 30% a year in terms of revenue growth. That's something we should see here in the short term. In the next 1 to 3 years in the monitoring division, it's obviously more on the regulatory side, getting more clearances on our products, getting more clinical studies that demonstrate the efficacy of our technologies. So that's what people should be looking for that division. But it's very much basically just business as usual in the pain management division, and doing more of the same, and therefore putting more cash on the bottom line.
Beautiful. And then Thomas, you've grown revenue approximately 400% throughout the last 5 years and remained profitable during your growth to 500 sales reps. How have you managed to achieve this? I mean, it sounds like some significant growth there.
That's right. Yeah, it's not always easy to grow at that kind of growth rates, especially when you get up into the hundreds of millions of revenue. So obviously we have a strong management team, and we have a very high focus on trying to anticipate the next bottleneck, because when you grow that fast and continue to do it and don't really get a chance to take a breather and then get ready for the next growth, but it just continues. You have to anticipate those bottlenecks. We don't always get them right, but just having that mindset throughout the entire organization of approximately 1,100 people now, having that mindset helps a lot. We have groups that focus on that only, making sure that we get through those bottlenecks, whether it's insurance billing, whether it's in production, supply chain, whether it's in sales. We keep trying to be a step ahead all the time in terms of for instance, the changes we make to the management structure in our sales organization, etc. So it's good leaders and a strong focus on potential bottlenecks.
Yep. And then, so Thomas, your 2023 year-to-date orders have grown 51%. What is driving the order growth? Headcount or productivity?
Well, clearly it's productivity, because we, with that many sales reps, there will continue to be a lot of inefficiencies, especially in a strong growth scenario like this. So we're not net adding that many sales reps, but we keep getting better and better at making sure that new sales reps that join the organization pretty quickly get up to a decent amount of production of orders, and that's what we're heavily focused on. So it's productivity growth, and we'll continue to see that going forward for the next several years. We'll continue to see an average of probably 20 to 30% order growth, and the revenue will obviously follow that.
Beautiful. Well, Thomas, is there anything else you would like investors to know, or anything else that you think investors should be looking forward to right now?
I think the two main takeaways from someone getting introduced to Zynex for the first time is that in the pain management division, yes, we have been growing by leaps and bounds for quite some time, but we still have a long runway. We expect that we can have a straight line to approximately 800 million in revenue, and the profit we are generating in that division has enabled us to diversify our business, to become a strong player in the hospital monitoring space, where we have 4 game-changing technologies on the way. So long runway in pain management, game-changing products in the hospital monitoring division. I think that from an investor point of view, you get the best of both worlds: positive cash flow, strong fundamentals, long runway, and then you have the rocket ship, or you have four rocket ships that are getting ready to get launched in hospital monitoring. Those are important.
Yeah, I mean, there you have it, Thomas. Thanks again. Cannot thank you enough for joining us on Benzinga's Biotech webinar. Hope to have you on again in the future anytime. You have some exciting updates that you'd like to share with us.
Look forward to it. Thanks, Aaron.
Of course. All right, Thomas, enjoy the rest of your Thursday. All right, guys, there you have it. Thank you to everyone who tuned in with us today. I see you, Jesse, in the chat. What is up, my man? I'm going to bring my man Matt back on the stream. Matt, how are you doing?
I'm doing well, Aaron. Well done today. Great job by you, by our colleague, Tony. And a big thank you to all of our guests today for sharing their deep expertise and analysis with us. And one more thank you, of course, to our sponsors at GRI Bio, CNS Pharmaceuticals, and Zynex. We greatly appreciate their support of today's webinar, as well as our technology partners at Daily Hunt. And finally, a big thank you to all of you for taking your time out, joining us. Be sure to check out all of our upcoming live and virtual events at benzinga.com/events from the entire team here at Benzinga. Thank you for joining us. We hope you have a great day. We hope we see you at the next event real soon. Until then, be well.